Welcome back to the Market Matrix. In this video, we're going to speak about the bearish island reversal. So we already spoke about the bullish island reversal, and what it consisted of was basically a stock that was trending lower, it gapped down, it formed some sort of consolidation that looked like an island because it was isolated before gapping up. So in this case, let's look at the bearish island reversal. So here's what it is. The stock is running up, and then we see it gaps up. And again, I go over this. I constantly mention these things within the videos just to make sure that the ideas are brushed up upon if you are following the videos. And in this case, it gapped up. So the gap is, it closed over here on this day, and the next day it opened up here. And then it ran up here and closed over here. And again, each one of these is representing 1 day of price action. And with this pattern, the island reversal pattern, whether it's bearish or bullish, you really won't see this on an intraday basis. You would see this on a daily basis. Maybe a yearly chart, you would be able to see it. Maybe it'll happen in a week's time, in a month's time, a couple weeks time, a couple months time, a year's time. So that's this pattern. Now what happens after it gaps up is we already start to see a little bit of selling pressure from this candle. So we see it gapped up, and you see the wick over there signified that, okay, the candle stayed up here, but there was a little bit of selling going on, but not significant enough so far. So we see it's bouncing around over here, it's bouncing around over here. There's some buying, selling taking place. So what do we see over here is that, okay, maybe the sellers are slowly starting to step in. Then over here we have this pattern which we'll go over when we get into candlesticks formation, which we'll get into really soon. And this is a reversal pattern within it, a reversal basically set of candles within itself. But we'll get into that really soon. For now, let's stick to the island reversal. So what we see here is the stock gaps down. So it gaps up over here, has this consolidation, and you notice this over here is isolated. The price action is isolated. That's why it's called the island. Islands are isolated. And then we have the gap down over here. So you notice the gap and the gap over here. So over here, we can now spot the bearish island reversal. Again, before this candle, we didn't really know what was going to happen. Maybe this thing stays over here, above this gap price. Maybe this thing just comes back down by itself. Maybe it continues higher. But after we see this gap up, consolidation of price, and gap down, we now see the island reversal. And just like the bullish one, we're going to basically do the same thing. The entry is going to be when we get this gap down over here. And if you notice where the gap down is, you see this low over here, the lows it had within this consolidation period. Those lows, that's where the candle is. If you get that, that's beautiful. We want to enter over here a short trade, meaning we're anticipating the price to go lower. So you either enter through shorting the stock, or you're going to enter it through buying put options. But if you're starting off, put options might not be the best idea, or even shorting might not be the best idea if you're starting off initially, because basically when you short a stock, you have unlimited downside. But we'll get into that later on in the videos. So this is a bearish formation, and again, bearish means anticipating prices going lower. So the measured move we're going to get is from the highest point of this island. I'm going to call this the island because this is the isolated part. So the highest point of the island up to the lowest point, you measure that move, and where you're going to expect that move to continue to is from this low over here. So basically from the gap down area right here. You just add that measured move, and that's where you should expect it to go. Now, if you get the candle to go back into this range of the consolidation, we see this broke back above, we're going to cut the trade because at this point, we're not sure what's going to happen. Maybe this thing continues, fills this gap before continuing lower. Maybe it fills the gap and keeps going up. Maybe it just continues lower and we re-enter the short trade back when it breaks below this line over here. But if it breaks back above here like this, we cut the trade just so we can step back and see what's going to happen next. But if not, if we get this and this thing continues lower, what you're going to want to do is, well, you enter the short trade over here. Beautiful, because we spotted the bearish island reversal pattern. So we enter the trade over there, and you just ride that wave down. Now again, I mentioned this in one of the other videos, but somebody asked me the other day, oh, what do you mean ride the wave down? Why would you want to ride a stock lower? Well, you can make money when a stock goes up. You can make money when a stock goes down. You can make money when the market's moving sideways. But there's many strategies that you can implement, and after learning and understanding what they are, then you can use them. Because if you're just using them without knowing what they are or what can happen or your risk or anything, then that's where things start to get a little messy. So in the beginning, do what you know. Keep an open mind to maybe learning other things. But in this case, this is a bearish formation, again, anticipating price going lower. So let me just make a quick recap. Price is running up, price gaps up over here, and it consolidates, sort of just moving sideways. And then you see the isolation once we get that gap down. So once we get this candle to gap down, we now can assume that this may be a bearish island reversal, which in this case it is. So we enter the short trade over here. If the trade goes up like this and closes like this the next day, then we close the trade because we are uncertain of what's going to happen next. But if not, if the trade's still intact, you ride the wave lower, you measure the move, and then you just exit the short trade. And why exit over here? Not over here, not down here, not middle over here? Well, because this is the measured move, meaning this is the move we should anticipate to happen. And again, as usual, the market is always right. So I could tell you this is the measured move, and in your head, this could be a measured move. And the CEO of God knows what company could tell you this is the measured move. But if the market decides to turn over here and decide to go up, then, well, guess what? The market is always right. So you want to always have that in mind. Know that anything can happen at any given point and be prepared to adapt. Just like I say, you need to be like a chameleon. If the market's going this way and then suddenly goes this way, you need to be able to react to that and see what's happening. Is it just a pullback? Is it a reversal? Should I buy more? Should I take it off completely? Should I cut the trade? Should I take my profit? So again, this is the measured move we are anticipating. So if nothing happens that's against the plan, then you stick to the plan, you ride the wave lower, and you exit the trade. But if not, adjust accordingly to what the market is giving you. I hope this video was helpful to you in understanding what a bearish island reversal is. And if you like it, maybe like, subscribe, stay tuned for the other videos, watch the previous videos, and I hope you're able to learn more about the markets as we dive more into the market matrix. So, thanks again for watching. See you later.